Welcome to our journey through the evolution of money, a fascinating reflection of our changing needs, technologies, and societies over time. From the barter system of our ancestors to the digital currencies of today, we'll explore how money has shaped the course of human civilization. Money, in its essence, represents value. But that value has taken many forms throughout history, from tangible goods to intangible bits stored on a computer network. So buckle up as we embark on this cosmic adventure through the ages, tracing the footsteps of humankind as we've innovated and revolutionized the way we exchange value.
Before the invention of money, imagine a world where you had to barter for everything you needed. You had chickens, but you needed wheat. So you'd have to find someone willing to trade their wheat for your chickens. That's the barter system, the original way humans exchanged goods and services. This system, while straightforward, had its limitations. Imagine trying to find someone who not only had what you needed, but also needed what you had. This double coincidence of wants was essential for a barter to occur, making transactions incredibly inefficient. How do you determine the exact value of a cow in terms of pottery or tools? It gets complicated, right? Early societies faced these exact dilemmas. The lack of a standardized medium of exchange made trade cumbersome and limited economic growth. The limitations of the barter system paved the way for a revolutionary idea: commodity money. This innovation marked a significant leap forward in the story of human progress.
As human societies grew larger and more complex, the limitations of bartering became increasingly apparent. Enter commodity money, a system where items with intrinsic value were used as a medium of exchange. Think about things that were valuable across different cultures and time periods. Gold and silver, with their rarity and durability, quickly rose to prominence. But it wasn't just precious metals. In different parts of the world, societies relied on diverse commodities. In ancient China, durable and valuable cowrie shells were used as currency. The Vikings, known for their seafaring prowess, favored silver, often in the form of intricately designed arm rings or hack silver. In many agricultural societies, these staples became forms of commodity money. Salt, a vital preservative, was another valuable commodity used for trade across vast distances, even fueling empires. The use of commodity money was a significant step forward from bartering, providing a more standardized way to measure value and facilitating trade over larger distances.
Around 600 BCE, a pivotal moment occurred in the history of money. The Lydians and Anatolian civilization minted the first official currency coins. These early coins, typically made of electrum, a naturally occurring alloy of gold and silver, bore standardized weights and distinct markings. Imagine the impact of this innovation. No longer were people relying on cumbersome commodities or subjective bartering. Coins provided a standardized, portable, and durable medium of exchange. The use of coins quickly spread beyond Lydia, revolutionizing trade and commerce throughout the ancient world. From the Greek empires to the Roman Republic, each civilization stamped its own unique symbols and denominations onto their coins, reflecting their culture and power. Think about the Roman denarius, a silver coin that facilitated trade across the vast Roman Empire for centuries. These coins weren't just a means of exchange, they were symbols of imperial might and cultural unity. The invention of coinage marked a significant step forward in economic sophistication, paving the way for more complex financial systems, including the development of banking and credit.
The invention of paper money was a revolutionary development in finance. Imagine a world without bulky coins or bartering. Paper money emerged during the Tang and Song dynasties in China. These notes, backed by commodities like silk, were easier to transport. Marco Polo marveled at paper money in Kublai Khan's Yuan dynasty. Paper money reached Europe through trade routes and explorers. Initially met with skepticism, it gained acceptance as a convenient alternative. Merchants no longer had to transport chests of gold, reducing theft risk. Paper money allowed governments to manage economies and stimulate growth. However, it also presented challenges like overprinting and inflation.
As trade networks expanded and the use of paper money grew, a new player emerged in the world of finance banks. These institutions, initially acting as safe havens for merchants' deposits, quickly evolved into vital intermediaries, facilitating trade and economic growth. Imagine a world where you could deposit your gold with a trusted banker in one city and withdraw it in another, using a simple note of exchange. This concept, known as bills of exchange, revolutionized international trade. Merchants no longer had to risk transporting large sums of money across treacherous seas or bandit-infested roads. Bills of exchange provided a secure and efficient way to settle debts and finance commercial ventures across vast distances. Banks, with their growing networks and financial expertise, became essential players in facilitating these transactions. They provided loans, exchanged currencies, and managed the flow of money within and between nations. This era marked the rise of sophisticated financial instruments and practices. Double-entry bookkeeping, developed in Renaissance Italy, provided a standardized method for tracking income, expenses, and assets, revolutionizing accounting practices.
The 20th century ushered in a new era of technological advancement, and the world of finance was no exception. The rise of electronic money, a revolutionary concept that would transform how we transact and interact with money, began with the humble credit card. Imagine a world where you no longer needed to carry wads of cash or write checks. Credit cards, initially introduced in limited forms in the early 1900s, gained widespread acceptance in the post-war era, offering a convenient alternative to traditional payment methods. Debit cards followed, allowing consumers to access funds directly from their bank accounts electronically. The introduction of ATMs, or automated teller machines, further revolutionized banking, providing 24/7 access to cash and basic banking services. With the advent of the internet in the 1990s, online banking emerged as a transformative force. Consumers could now manage their finances, transfer funds, and pay bills with a few clicks of a mouse, all from the comfort of their homes. Electronic money, with its speed, efficiency, and convenience, quickly gained traction worldwide.
As we entered the 21st century, the digital revolution reached a fever pitch, and the world of money was about to be disrupted once again. The emergence of Bitcoin in 2009, the first decentralized cryptocurrency, sent shockwaves through the financial world. Imagine a currency not controlled by governments or financial institutions, but by a distributed network of computers using cryptography to secure transactions and verify ownership. This is the revolutionary concept behind cryptocurrencies. Bitcoin, with its limited supply and decentralized nature, captured the imagination of early adopters and tech enthusiasts. It offered the potential for faster, cheaper, and more secure transactions, bypassing traditional financial intermediaries. Thousands of cryptocurrencies have emerged since Bitcoin, each with its own unique features and applications. Ethereum, for example, introduced the concept of smart contracts, self-executing agreements written in code that automate complex transactions. The rise of digital and cryptocurrencies has sparked intense debate about the future of money. Proponents tout their potential to democratize finance, empower individuals, and drive innovation.
As we stand at the precipice of a new decade, the future of money is ripe with possibility, as vast and unknown as the universe itself. Central banks are developing digital currencies, combining fiat stability with digital efficiency. Imagine receiving benefits or paying taxes digitally, with faster settlements and lower costs. This is the potential of CBDCs. Blockchain technology, beyond cryptocurrencies, is being explored for many applications. Its secure, transparent records can revolutionize industries. Imagine transparent supply chains, ensuring product authenticity and reducing fraud, or land registries secured on blockchain, making property ownership secure and efficient. The future of money is about how we interact with value. Decentralized finance, or DeFi, offers alternatives to traditional banking, lending, borrowing, and investing on blockchain. So the evolution of money reflects a broader trend toward increasing efficiency and convenience in financial transactions, often driven by technological advancements and changing economic contexts. From the barter system to the digital age, we've witnessed how human ingenuity constantly seeks to improve how we exchange value. As we look to the future, the world of money is poised for further disruption and transformation. Central bank digital currencies, blockchain technology, and decentralized finance are just a few of the trends shaping the financial landscape. Just like the universe, the story of money is far from over. New chapters are being written every day.